So we're marking quite a milestone this year, aren't we? 50 years of microcredit.
Yeah, it's pretty significant.
Thinking back to 1974, Siwa Bank in India getting started. A real trailblazer.
Absolutely. And it's quite something that Muhammad Yunus, the father of microcredit, he's still in the mix as chief advisor in Bangladesh this year, 2024.
Incredible longevity and impact.
It really is. So for this deep dive, we're planning to really explore microcredit, where it started, how it's changed, what works, what doesn't.
And we've got some good sources to lean on.
We do. We've looked at the MFIN report that covers roughly the last decade, 2013 to 24, and also insights from Poor Economics, that fantastic book by Abhijit Banerjee and Esther Duflo.
Great. Okay, so maybe let's just quickly clarify terms. Microcredit, microfinance, they often get used together. What's the key thing for you to keep in mind?
Good starting point. Yeah. Basically, microcredit is just one piece of the microfinance puzzle. Microfinance is broader, It covers savings, insurance, maybe payment systems, stuff like that, all for low-income folks. Microcredit, though, is specifically about those small loans.
Gotcha. Small loans, mutual trust, often involved short repayment time.
Exactly. That's the core of it.
Right. And the initial idea, the promise, it was huge, wasn't it? I remember that quote from Kofi Annan.
Oh, yeah, calling it a critical anti-poverty tool.
And a wise investment in human capital really captured the optimism.
It did. And there was that other really powerful idea floating around, like give a woman microcredit.
She, her husband, her children, and her extended family will eat for a lifetime. Yeah, it really spoke to this potential for massive change from a small intervention.
And there was some data backing this up early on, like Grameen Bank's findings on schooling.
Precisely. Grameen reported, I think it was around a 1.9% increase in school enrollment for girls.
Okay.
And maybe 2.4% for boys if their mothers had access to these loans. So, it wasn't just about money, it was about broader development, which connects to that idea of escaping the poverty trap that's big in poor economics, isn't it? How does microcredit fit in there?
Yeah, they explore that a lot. The thinking is that microcredit can give people that little bit of capital they need to get started.
Like buying supplies for a tiny business. Or tools.
Exactly. Things that seem small but are huge barriers if you have literally nothing. It overcomes that initial hurdle. They mention examples like the Millennium Villages in Kenya, where access to resources, including finance, seem to help communities break those cycles.
Right, creating that first step up. And another angle I find interesting is building a financial history.
That's crucial. For people totally outside the formal banking system, interacting with an MFI, even for a small loan, starts building a record.
A track record of borrowing and repaying.
Yeah, which, down the line, could open doors to other financial services. It sort of challenges that old model, where banks mostly lent to people who already had money.
The social banking idea, almost, versus just lending to the wealthy.
Kind of. Traditional banks need collateral, history, which the poor just don't have. So models like microcredit were designed specifically to overcome that, intentionally inclusive.
And the big vision was turning job seekers into job creators, right? Fostering entrepreneurship.
That was definitely a core goal. Give someone a small loan, they start a small business, generate income, maybe even hire someone else eventually.
Creating local economic activity.
Yeah, and that was linked to this idea of a trinity of trust.
Okay, what's that?
Basically, that successful microcredit builds trust on multiple levels. People repaying loans builds economic trust. That strengthens social bonds in the community. And maybe that collective stability even helps politically. It's all interconnected.
Interesting. Okay, let's pivot to India specifically. Since Saya was so early, how did things unfold there?
Well, India's story is really dynamic. Cyient in '74 was huge, operating as a cooperative bank, regulated by both the RBI and the state.
Okay.
But a really pivotal moment was the work of Maratha. They pioneered the self-help group approach, the SHG model.
Right, that's a term you hear a lot in India.
Absolutely. And their work really paved the way for the NABARD SHG Bank linkage program. NABARD being the National Bank for Agriculture and Rural Development.
And that linkage program was a big deal.
Massive. It launched in '92 and basically built a bridge between these informal community groups, the SHGs and the formal banks.
So the groups could access proper credit.
Exactly. It scaled things up significantly. And later, you had government schemes like the Swarnajanti, Grama Swarajgar Yojana, really pushing for micro-enterprises in rural areas.
Then things really accelerated after 2000.
Yeah, the number of microfinance institutions just exploded, all different kinds.
Which I guess leads to needing more structure, more regulation.
Precisely. That's where the Malagam Committee came in. It was
Right.
really important for formalizing the sector, leading to the NBFC MFI category, non-banking financial company microfinance institution.
Okay, so we have these different players. How do they actually deliver the loans? What are the main models?
Two main ones stand out. There's the joint liability model,
Uh,
often used by those NBFC MFIs we just mentioned. Basically, individuals form a group, maybe 5 or so people, mainly just to get the loan. The key is uh, everyone in the group is on the hook if one person defaults.
Right. Peer pressure is a guarantee.
Essentially, yes.
Yeah.
Then the other big one is the SHG model itself.
The self-help group model.
Exactly. The one boosted by that SHT bank linkage project. Here, the group is more organic, often starting with savings among members first. Then, as they build trust and skills, they link up with a bank for larger loans. It's more community-driven.
Got it. So looking at India today, what kind of scale are we talking about? How many people are reached?
The numbers are pretty staggering, actually. The overall industry has reached about 78 million customers with credit.
Wow, 7.8 crore.
Yeah. And what's really interesting is that a huge chunk of that, around 45 million, are in rural and semi-urban areas.
So really getting outside the big cities.
Definitely.
Yeah.
And that SHG bank linkage program we keep mentioning, it's benefited nearly 12 million SHGs, 119 lakh. And get this, 87% of the members are women.
87%. That's huge. Links back to that original idea about empowering women.
It absolutely does. The reach, especially through SHGs, is undeniable. But, it hasn't all been smooth sailing. There have been some serious challenges and criticisms along the way.
Right, those numbers are impressive. But let's talk about the flip side. What are some of the main problems that have come up?
Well, one major issue has been aggressive recovery practices.
Yeah, so.
There have been cases, the Andhra Pradesh SKS situation is maybe the most infamous example, where collection agents used really coercive tactics, put immense pressure on borrowers who were struggling.
Yeah, that sounds counterproductive to the whole idea of empowerment.
Completely. And then there's the cost, the interest rates.
Right, they can be pretty high, can't they?
They can. Reports from groups like Sadan, which is an association of MFIs itself, have shown averages around 24% per year, plus significant processing fees on top.
24%. I mean, for people with very little income, how does that really help them get ahead? Isn't there a risk it just swaps one kind of debt for another?
That's exactly the criticism. If the cost of the loan eats up any potential profit from their small venture, are they actually better off? It's a valid question.
And has the growth been even across the country?
Not really, no. There's a definite geographical skew. Both the MFIs and the SHGs tend to be concentrated in certain parts of India.
Okay.
Our sources mention some data, referenced by a batch code, actually. Pressure groups, batch D1, D2, tag SJ003, highlighting this concentration, though it didn't name the specific regions in the material we saw. But it shows some areas have way more activity than others.
And Poor Economics had some ground-level observations too, didn't it? Like in Hyderabad.
Yeah, that was fascinating. In the Hyderabad slums they studied, only about a quarter of families borrowed from MFIs.
Only a quarter. Who were they borrowing from then?
More than half were still going to traditional moneylenders.
Wow.
It seems the MFI model, with its fixed repayment schedules and group meetings, was just too rigid for some people's needs. The moneylender, while maybe charging more overall, offered more flexibility.
That's a really important insight. It suggests microcredit isn't always the most practical option, even when available.
Exactly. Which ties into another key point from Poor Economics. Microcredit is not a magic pill.
Right. It helps with one specific problem, access to credit.
Yes, a very important problem. But poverty is complex. You've got health, education, infrastructure. Microcredit alone can't solve all of that.
So, acknowledging these hurdles, what's been done? Any steps taken or suggestions from the sources?
Well, the Mulligan Committee recommendations were a big step on the regulatory front, trying to curb some of those aggressive practices.
Okay.
There have also been initiatives like the Indian Microfinance Equity Fund, or IMAF,
Yeah.
to help MFIs with their own funding, their liquidity.
Right.
And more recently, the RBI brought out updated guidelines for microfinance lending in 2022, again, aiming for more responsible practices.
So, ongoing regulatory efforts. Anything else?
NOBARD has its eShakti initiative, trying to digitize SHG records, which should help with transparency and efficiency.
Technology playing a role.
Potentially, yes. And the sources briefly nod to examples elsewhere, like Mekar in Indonesia or Grameen in Bangladesh, still seen as key models. Even mention a bill AB 423 in the U.S. showing these ideas pop up globally.
Interesting. And looking forward, any specific directions recommended?
There seems to be a push towards really focusing on that SHG-centric approach, building on what groups like MioRID started.
Because of the community aspect.
Partly, yeah. And also, remember that finding from Poor Economics about moneylenders in Pakistan?
Vaguely. Remind me.
They found that even though these moneylenders charged incredibly high interest rates, like 78% on average, their default rates were super low, median of just 2%,
Wow.
because they relied heavily on social networks, local knowledge, trust, and they were flexible with repayment. There are lessons there, perhaps, for how formal institutions can leverage trust and offer more adaptable terms, maybe like SHGs often do.
So flexibility and trust are key.
Seems like it. There's also talk about needing different funding sources for the NBFC MFIs, so they aren't just relying on bank loans themselves. And finally, a bit of a warning sign: as of March 2024, some clients apparently had 4 or more active microloans.
Oof. That sounds like potential over-indebtedness.
Exactly, something that needs careful watching.
Okay, so wrapping this up. It's clear microcredit has immense potential. We've seen its power as a tool against poverty, its journey in India, the incredible reach of SHGs, especially for women.
Definitely. Lots of positives.
But we absolutely have to acknowledge the serious challenges, those recovery issues, the high interest rates, the need for flexibility, for approaches built on real trust.
It's a very complex picture, successes and significant areas needing improvement.
So it really leaves you, the listener, with this question. Considering everything we've talked about, the good and the bad, how do we make sure microcredit truly empowers the most vulnerable people without just trapping them in new kinds of debt? And, thinking ahead, what role can technology and maybe those community-led initiatives like SHGs play in shaping a better future for microcredit?